We've seen that Nedbank share coming under pressure today, down by over 8% at this stage. So really retracing all of the takeover premium that had been built into it. What did you make of that announcement?
Well, you know, it's of course a disappointment when something like this happens, when you see your own share price being down by over 8%. But you're quite right. This is essentially just this bid premium or the takeover premium that was in the share price. I think it's important to call it a bid premium rather than a takeover premium, because I think we need to remember that this was merely a bid for a change in majority shareholder rather than anything else. The announcement out from Old Mutual this morning to announce that HSBC has informed them that they will no longer be in exclusive talks with them, and the story first broke on ft.com this morning, and the indications there was that nobody really knows why they are walking away from the deal. Rumour mills say maybe they found something in the due diligence. Old Mutual says no, there was no indication that is the case, so who knows, it might even be based on regulatory issues as well. So I think the important point for us is that Nedbank remains a very strong, well capitalised bank with a strong growth strategy. That growth strategy incorporates its strategy into growth into Africa. That was, after all, the reason why HSBC was interested in Nedbank in the first place. And whether we have a change of majority shareholder from one international partner to another or not doesn't change anything of that. The international partner brings the ability to fast track some of those strategies, but it doesn't change anything about the basic strategy and business model of Nedbank. And from that point of view, it remains a sound business. And as you can see, I'm deep green again today, no red in sight.
And Nerina, of course, that FT.com report also talked about Standard Chartered perhaps preparing to step into the breach. And of course, we do know that Standard Chartered raised about £3.3 billion through a rights issue this week. Do you think that Standard Chartered could be preparing for a bid?
I think there's a lot of rumours that suggest that might be the case, although I think they would find it quite difficult to convince the people who took off the rights issue that is what they're going to be using it for, because they were quite vocal in their rights offering documents that this would not be used for acquisitive growth. So if they were going to change the terms of that rights issue, they would actually have to go back to shareholders again. So although I think the rumour mongering would like to think that was the reason for the rights issue and that they are standing in the wings to take over from HSBC in its bid for Nedbank, I think Standard Chartered will not find it that easily to use the existing rights offering that they raised to actually buy Nedbank from Old Mutual.
Okay, Nerina, I'm going to take you off the spot now. Perhaps just looking at the broader markets, we have seen a little bit of a pause at the moment. So the JSE pulling back slightly today. Yesterday also quite flattish, but we have really had a magnificent rise over the past 6 weeks, with the toppy up by about 12%.
Yes, it's certainly been in a spectacular third quarter. September was one of the best months on record in many international markets in particular. So I think what we are experiencing at the moment is a little bit of profit taking, maybe some consolidation. We are still at 2-year highs, over 30,000 on the all-share level. So I don't think anything to be too concerned about. Every time that Ben Bernanke or any of the other central bankers who are engaged in quantitative easing open their mouths indicating that this is a scenario that will remain for the foreseeable future, markets take new heed from that and they continue to power ahead. So as long as the cheap money is available and is around, I think it will provide the support for the equity markets that we are seeing. So I think what we're currently experiencing is nothing more than just a consolidation and a bit of a breather.
Because we're also experiencing what some would call a currency war, and I see China has said that it will allow the yuan to appreciate if the United States pulls back on some of this quantitative easing. So a bit of a standoff developing between the China and the US.
Yeah, it's interesting to notice how politics is entering the fray in what probably should only be an economic issue. This is maybe a modern day form of trade war also that is busy going on here. So certainly one, probably as far as we're concerned, the most important issue at current times is the issue of the currencies and how it plays out. We saw a power like Japan trying to maintain a certain level of their currency or certain allow it to weaken, throwing a lot of money at the problem, and were not successful still at it. China, of course, has got the world's largest reserves, so if they were going to play the big cannon game or the big gun game, they could easily be the winner in all of this, and that's the reason why they've been able to maintain their currency at the levels that they have been. And of course it makes it not only uncomfortable for the Europeans but for other Asian markets as well. So there's a lot of pressure on China to allow their currency to drift in a broader band and to allow market forces to determine the correct level. On the South African side, we had the monetary policy briefing last night where Pravin Gordhan was also quite clear in his statement last night to say that there will not be a pegging of a certain target level for the rand, and pleasing to see that they acknowledge that there is not, that they are not bigger than the market. The market is bigger than them, and they actually cannot afford to try and defend a certain level on the currency. So they will continue to engage in the currency markets as and when they feel that there are opportunities to do so, but they will not be defending a particular level of the currency. The implications of that is, in his own words last night, is that the currency will remain stronger for longer and inflation will be lower than previously expected also for a longer period. So the forecasts in terms of where the currency and the inflation will be have been brought lower, and this has brought some renewed sort of hope and speculation into the market of potential further interest rate cuts. What he said on that front as well was that there would be the possibility that maybe they do more frequent cuts but of smaller magnitude. So looking maybe at 25 basis point cuts rather than 50 basis point cuts in future. Of course, as your level of interest rates decline, if you do 25 basis point cuts, they have pretty much the same impact that a 50 basis point cut has at a much higher level. So I wouldn't say that he indicated that would happen at the next MPC meeting, but I think what we clearly see from that is that there is scope for the Reserve Bank. If the current currency environment is maintained, there is certainly scope for further interest rate declines.
Just a quick one, we're almost out of time. Last day to trade on the Didata shares before it's taken over by NTT, Nerina.
Yes, it's a day to say goodbye to Didata. Really is an end of an era. This used to be in the heydays one of the biggest companies in our top 40. Nowadays it doesn't even make it into this blue chip index, but it is the last day to trade. It's being removed from the Indy 25 and the Findy 30 indices, being replaced by Fushini and Imperial in those two indices respectively.